set the stage here a little bit. I'm going to give it to Norman, who we haven't heard from yet. Talk us through who are the big actors, the big players in this universe of the control of money and where banking is heading in 5 years.
Yeah, first, I'm Norman Tambach, Mashreq, and orange is our color. So I hope we can part of your journey as a banking partner. Yeah, Matt, thank you very much. I think what you were asking was, what are the big players? So we have the big tech, the fintech, neobanks, the Apple, the other big techs. We got the regulators always play a big role, and of course the banks. Yeah? And then we get new developments like the stable coins, bitcoins, whatever is going there. And yeah, we discussed a little bit up front, and the question was who's going to win. I don't think this is a game of winners or losers. In the end, this is something where those institutions and those developments will go hand in hand, and it will change the landscape. Looked a little bit in the past. I'm a banker. You see that. And why do we have banks? By the way, it used to be that people who had money left it in temples, not in banks. So banks came there when there was a need for trust, there was a need for safety, there was a need to be more efficient to handle money if you were doing transactions. And later on, when you had central banks, you had monetary policy. So also governments used banks via the central banks to use their monetary policy. And you see now with all those developments around us, I think safety and trust is still there, monetary policy is still there, but the big techs, stable coins, and all those developments will challenge how efficiently we can work the financial system. And it will also determine, I think, client experience, CX. I think I think it's very healthy and very good that we now see those challenges because, things are changing. I think banks have woken up, but especially when the neobanks were starting, they had to wake up to make it more comfortable for clients to use banking, also decrease fees. So in the end, it's working together. And I think regulators have a big role to play because you always see like the Pavlov reaction. We saw that at the financial crisis. We saw regulations breaking down over banks. There are now discussions on private credit. If that goes, there will be probably a reaction from the regulators. And also developments like stablecoin also deserve their guardrails so that they can grow and prosper in safety for the customers. So,
I'm just going to take your question, Norman, and pose it to Bill. Bill, why do we need banks?
Sorry, why
What are banks for? Do we need them?
Yes, in a sense. Yeah, I think, let's say, if I want to buy a cafe in Dubai, it's always better to use a local credit card. And that is, where the use case I need a bank. Having said that, in past few years, we do see bank has some kind of a very legacy disadvantage, like, the SWIFT system. If I want to transfer money from country A to country B, usually the minimum cost is $15, and the minimum, the length of the time is 72 hours. And, if bank in the future not sacrificing the KYC and the compliance, but also can embrace the blockchain and open finance system. Basically, you will enable the people to move the money, do the remittance with nearly zero cost and instantly. Yeah, I do think, bank build up a very legit compliance system globally, but, for some user experience, and there is a chance bank can embrace the next generation technology.
Yeah. Brett, are regulators embracing the next generation of technology?
Thanks, Matt. And I appreciate the opportunity to be here with all of you today. So that sort of depends on which jurisdiction you're asking about. I think in the US, there's obviously been a tremendous shift in the posture toward digital assets just since the start of this administration. We saw the creation of the first White House Crypto Council. We've seen multiple executive orders issued establishing the Digital Assets Working Group that's comprised of sort of the heads of the primary regulatory agencies in the US. But the US is playing catch up a little bit. The EU has had MiCA out there for a while. In Dubai, we have the Virtual Asset Regulatory Authority. There are other jurisdictions that have really well-developed frameworks for digital assets. And unfortunately, the previous administration in the United States was not only hostile toward digital assets companies and their development in the US, but they were also hostile and prohibitive of traditional banks participating in the crypto space. And it wasn't just the US. There was, the Basel consultation that applied really punitive capital treatment to banks' ability to engage with crypto at all. But we've seen now in the US that the prudential regulators have rescinded guidance that required pre-approval for banks to engage in crypto. They've taken various steps to try to sort of integrate fintechs and crypto into the traditional financial system in the US. I think just yesterday, Fed Governor Chris Waller sort of previewed a work stream at the Fed where they're developing what they're calling a skinny, more limited access to a Fed master account, which is a really big deal, and it's something that's been a huge debate amongst traditional banks and legacy institutions who have Fed master accounts and fintechs who want to take advantage of being a part of the Federal Reserve System and having those accounts. And there have been lawsuits brought against the Fed in the past. So that's a huge development. So I think the answer to your question is in the US, absolutely, there's been a total 180 with this current administration and this current slate of regulators to really embrace digital assets and innovation and try to attract companies to domicile in the US.
All right, we're going to come back to the US 180 in a few minutes here, but Stella, I wanted to ask you to pick up on this question of KYC, of know your customer that Bill was bringing up. I know you've got thoughts here from a risk perspective. What do you?
Yeah, I think he mentioned two problem statements. One is regarding cost and the speed of the transaction. The third problem statement for the next generation is about security and stability. So basically, access to a new asset class comes with the cost of the risk. So what is coming into force is a harmonized regulatory framework. So Brett mentioned in the European system, there is development in terms of markets in Crypto Act, so MiCA, and also this will be very important because banks will be part of this system and will have the same standards that are used in traditional finance in order to prevent fraud and anti-money laundering should be applied to all players in the ecosystem. And this is what's going to be addressed for the future generation. So access to money will be more democratization of access and also all about financial literacy. So the next generation will be able to invest in an easier way, in a more accessible way, and in a safer way. So what we are developing now is an infrastructure that is compatible with the speed of the new products that are coming into market, including Bitcoin, crypto, digital assets. And also, there will be a research in the sustainability topics as well, because the next generation is also interested in that. So I believe that there are so many new opportunities for all players, including banks and regulators across jurisdictions. It's more about the communication between these different systems in order to have a stable environment.
Bill, I'm curious from your perspective as global entrepreneur, someone who has been involved in the formation of a lot of companies, does the regulatory stuff that we're talking about here, does this landscape matter to you? Does it affect where you choose to do business and how your companies, move forward?
Yeah, I always like to make an analogy of being pirate or being a navy in past 15 years, especially in digital asset and the crypto industry. And I think there is some kind of a golden age. You better to be a pirate instead of navy, because if you want to be a navy, there's no regulator who want to speak with you because they feel it's too early. And that's why we see a lot of offshore entrepreneur who grow up, right? But I think especially in past few years after the FTX collapse, etc., the regulator began to understand this is a legit innovation and it is a double-edged sword. If you want to take advantage of its upside, and it's good side. You better to regulate it in a proper way. And in past few years, you can see, being a pirate is not a legit business model anymore. And all the Navy, they grow up dramatically. Look at the Circle's market cap. Look at, the Coinbase and Robinhood, they're getting into this industry. And I do think, going forward, be a regulated, savvy entrepreneur is super important. Having said that, I'm not saying being a pirate in past 10 decades, all of them, sorry, 1 decade, all of them, they are bad. They're just, some kind of an innovator who want to do something in the frontier industry. And I think, still majority of them, they get into the massive adoption and they become, the co-builder of the regulatory regime in future.
Right. No, Norman, I think you represent the Navy here in this analogy, maybe. What is your reaction to this?
Maybe Navy with a little bit rebel at heart.
All right.
No, you need sometimes somebody to challenge the system. Yeah? And we see that now, I think, all over the world. We see that in finance, we see it with new development, we see it even in politics. And that brings time of change. And I think it's very important for regulators, but also incumbent companies like banks, that you're part of that change. I sincerely believe, and it goes as a person, but also as a company, if you resist new developments, if you resist change, you will fall behind. Doesn't mean that you have to go blindly in it and just accept everything there is there, but you should look how can you benefit, how can you work together with new developments, and in the end profit from it. And I think that it goes for any business and also the financial industry.
I want to move into stablecoins a bit here because I know there's a lot of interesting issues that we can get through. And Norman posed this to me, and I'm going to pass it back to you, Bill. If we're moving into this world of tokenized deposits, of sort of tokenized everything in traditional finance, what is Bitcoin here for? Do we still need that in a world where everything else, regular money essentially, is on the blockchain?
Yeah, well, that's a great question. I think when Satoshi set up the Bitcoin ecosystem, that is 2009. And why 2009? Because that's after 2008. And what happened in 2008 is like global money printing machine, kick off, right? And his philosophy is like so disappointed by those type of undisciplined financial policy from global policy maker. And he just want to build up a fixed money ecosystem. Going forward, this technology become democratized into a broader range of the tokenization model to build the cash, money, equity, stock, real estate, everything to this global open public computer network to make it borderless and permissionless. But on top of that, do we still need Bitcoin? I strongly believe we do, because Bitcoin is nothing related to tokenize money, tokenize real estate, etc. It's a digital gold who just want to be a alternative, escape of the global money printing catastrophe in a sense. And basically, imagine now the global money inflation and printing, and who is the victim? Pretty much 99% of the global 8 billion population. Everyone is paying by seigniorage to the policymaker. Everyone is paying seigniorage to some real asset owner. Like if you own AI stock, you're doing fine. Even you are owning some fiat, right? But imagine most of the population, they only have the fiat, and they don't have any other choice. And that is also why Bitcoin and stablecoin, especially Bitcoin and stable US dollar coin, become very prevailing in emerging market. Bitcoin is the escape of the gold. US dollar stablecoin may be better than most of the region's fiat. That's why most of the developing country populations, they understand US dollar is also inflating, but they still want to own part of it.
Yeah.
Matt, if I may, so we see 3 developments, right? We have the Bitcoin and all the other Ethereum and all the other ones. We have the stablecoins now coming up, and we got the CBCDs, central banks making their own, which is a bit lagging behind. So I was wondering myself if you have stablecoins, and I think that you clearly show that has a clear position, and you get the CBCDs. Is there still then room for the Bitcoins and those other ones? Because basically you got tokenized already too.
Yes. Yeah. Recently I I got some friends who brought their son and daughter, roughly 15 years old, in middle school, and come to consult with me how to trade crypto. I'm very surprised. And I have two findings. One, as a 15 years old teenager, their first asset class is crypto. Their first account is crypto. Second, they understand the Bitcoin, and they own Bitcoin instead of the gold as their first reserve of the value. So if we take one step back of the concept of the blockchain, stablecoin is just for like money. The tokenization of the real estate, etc., is going to be the mirror of those assets on the global public open computer. But Bitcoin is a digital gold, is another alternative of reserve of the value conceptually, if someone believes. Yeah, if some people don't believe, it's just a coin of Fugazi, right? It represents nothing.
Stella, do you think it's a good thing for the first asset for a 15-year-old to be buying crypto? Is that?
No, I don't think so, because of the risks and the volatility of the underlying asset. So it has to be a bit more balanced. And coming again to the point of financial literacy, it's very important. So in one hand, I find democratization of investments fantastic, because I think the pie has space. We are increasing the size of the pie and also the number of participants into it. So I think this is fantastic. The question is how this is going to come into play for the next generation. They need to be aware of the risks, and also with respect to the stability of banks. What is the advantage of having a stable bank? Basically, you are circumventing, minimizing the risk of cyber attacks, which is, I think, the major risk when we talk about digital banking. Then also about information. So we are preparing for the future also in terms of user experience. So when you talk about banking in 2030 or in future, what is the user experience that we are projecting? Basically deploying technology, AI, in order to have a better service, hyper-personalized services. Also, I envision in the future we'll have a VR session with your advisor, and you'll be able to have a live experience about projection. So I think there's so much more we can explore for the next generation in terms of explaining, talking about investments, what they can do to leverage and to have access at a lower cost, but also in a safe way. There's so much more we can explore with technology.
Brett, did you want to jump in here on anything that's been said in the last couple minutes? A lot of topics.
Well, we've covered a lot of ground here. I think one of the things that Stella mentioned is the need for robust BSA AML requirements with respect to crypto. And I mentioned sort of the work that's been done just in this year to advance policy in the United States that regulates crypto. The passage of the Genius Act comes to mind since we're talking about stablecoins, that creates the first federal regulatory framework for stablecoin issuers in the United States, which does subject any stablecoin issuer to robust BSA AML requirements. And additionally, in the United States, what I think is lost on a lot of folks is that since 2013, under FinCEN guidance, any sort of on or off ramp, any centralized entity in the digital asset space is subject to BSA AML requirements. So it's an argument for regulating crypto in the US, where these robust requirements apply to folks who are operating onshore within our jurisdiction.
You mentioned the Genius Act, and one of the issues that's come out of that is whether or not stablecoins could pay interest. I mean, it was banned under the Genius Act, but there's a lot of loopholes in this, and I know this is a big debate in this community. Norman, do you have any thoughts here on this question?
Yeah, stablecoin development is very interesting. Two things. One is it has to be guaranteed that it is tied and there is enough of the asset behind the stablecoin. That's the essence of stablecoin, and that needs to be very tightly regulated and controlled. I think and we are finding out the best way to do that. The other thing is, especially when you, for example, take US Treasuries, which is one of the biggest assets behind stablecoins, you get some interest on, not much, but you get some interest on T-bills. That is not transferred to the client. So, especially when you get people in frontier countries, like Bill said, then they probably go more for the valuation and for the certainty of the value that it upholds, just to avoid inflation or something. But in the end, in a more developed financial system, clients should demand that they got the interest as well of the underlying, or at least part of it. And yeah, that is at the moment that's not yet happening.
Bill, you can weigh in on this if you want, but I also want to know from your perspective. We haven't talked very much about sort of the big traditional financial institutions. You know, we talked backstage a little bit about BlackRock moving into the ETF space, things like that. Like, from your perspective, do you see a competitive threat from the old traditional finance institutions or from big tech more generally? Like, what is your interaction with them? What do you see from them?
If I speak on behalf of the crypto firm, I do see there is a threat. If I can take one example, what happened in commodity business back to 1999. Before 1999, after the Second World War, most of the global commodity trade, volume, etc., managed by the commodity firm, like Glencore, etc. But what happened in the late of 1999 is, you know, the Wall Street, the institutional, they innovate the paper oil, the oil future, etc., and their volume, the credit they can get is phenomenal as compared to the traditional standalone commodity firm. And nowadays, if we look at all the volume, you know, the influential power in commodity industry, there is still some room for the pure commodity firm. But still, you know, the majority or very significant part of the influence and impact belong to the Wall Street blue chip players like JP Morgan and Goldman. Same thing happened in this season. This season, I think, from my point of view, the biggest innovation of the crypto is BTC ETF in Wall Street. The biggest influencer of the crypto industry is Larry Fink and President Trump. And why Larry Fink, you know, from my point of view, is most influential guy in the world right now, because he managed the 12 trillion money, and most of the 12 trillion belong to the sovereign and the institutional investor. So in the end of the day, I do think, you know, it is a threat to the pure incumbent player, but it is also a very big booster to the whole industry development, in a sense.
Yeah. Brett, I'm curious if you think, you know, the U.S. is going to be able to innovate and help these companies. I mean, that's clearly the ambition. Is it actually going to happen? We're in the middle of a government shutdown back in the U.S. that doesn't seem to be helping anything.
The shutdown is not helping anything. I do think and I think maybe what you're referring to is there is this ongoing work stream to establish more holistic market structure regulation around crypto. They've sort of done the stablecoin issuer piece, but they still need to determine in the US, where we have this sort of wonky system of having two markets regulators, the SEC and the CFTC, they need to determine who has jurisdiction over digital assets and when a digital asset is a security versus a commodity and therefore regulated by either entity. That is ongoing, and it has hit some speed bumps in the process, which the shutdown is not helping, because certainly lawmakers are focused on reopening the government and addressing those issues. But I do think they are continuing to kind of negotiate behind the scenes between Republicans and Democrats. The really big issue that is difficult to solve, and I think it's probably fair to say that no jurisdiction in the world has really determined a super elegant way to do this, is how you regulate DeFi. When you are designing something that is intended to take human beings out of the equation and operate through self-executing code, then how do you have compliance and who's responsible for that? And that is really the big sticking point that is kind of holding up this process in the United States, because there is pretty significant disagreement about how this should work, and it sort of goes back largely to concerns about illicit finance and BSA AML requirements if you don't have a way to report some of these things and monitor what's going on. Certainly there are DeFi protocols that have factored some of that into the protocol itself. But there are still a lot of policymakers in the United States that want to impose other requirements that are difficult to meet, frankly.
Stella, do you want to give us a European perspective here?
Yeah, I think it's similar challenges in the European market. And I see that there is a lot of movement between institutions in order to come across with a harmonized framework in order to implement the future. And yeah, so similar challenges, but I think I envision that the ecosystem will be able to have a role for all parties involved.
All right, we've only got a couple minutes left, so let's just go around with one big question, and I'm going to borrow it from Eric Trump, who I know folks are going to hear from later. He's been saying that he thinks that banks will soon be irrelevant. So I'd love to hear from each of you whether you think by 2030 will banks be irrelevant and why. So Bill, let's start with you. Banks still relevant?
Yes, of course. I think right now the internet should have disrupted the whole media industry, right? But Wall Street Journal embraced the technology. Barron, embraced the technology of the internet, and still, one of the most influential media in the industry, and it's not being disrupted by internet. I think bank in the end is just a concept. The tech-savvy bank always evolve along with the tech, and non-tech-savvy bank, of course, it will be disrupted. So I do think bank will still be very, very relevant in future.
All right, Norman?
Yeah, what shall I say? I'm working at a bank, so hope I get a job in 2030. I'm with Bill. Again, we saw that with the neobanks as well. I think that's now 10, 20 years old. Was the end of the banks as we knew it. Didn't happen. For some banks, yes, but for banks who were also able to adopt and to enter the new digital age, they're still there. And my own thing is, as soon as we have another crisis of what sort, you get regulation coming in, and that's how banks in the beginning were brought into the world. And I think a bank or something like a bank is always necessary. So, yes.
Brett?
We may be in violent agreement on this panel today. Yes, I think that banks will still absolutely be relevant come 2030. It's interesting because historically, a lot of fintech companies, crypto companies, have sort of wanted to avoid having to comply with bank regulations and be treated like a bank because it is very onerous. And we're seeing that shift a lot. And going back to the US, where we have a slate of prudential regulators right now who are trying to sort of reduce burdens and streamline processes. You have a number of crypto companies, in particular Coinbase being among them, with pending applications before the OCC to get a national bank charter. So they realize at a certain point that there are a lot of benefits that come from truly being treated like a bank. And I think the fundamental question is really who is going to harness the innovation and the benefits of blockchain technology, who is going to do that most effectively. And I think it will be a combination of traditional banks, legacy institutions, and incumbents, and also the disruptors and innovators, and through partnerships, through processes of them starting to look similar in a lot of ways. But I definitely think that there's still a strong role for banks in the system.
All right, Stella, you've got a chance to stir up some controversy here.
I totally agree with the panel, and we can add that in the future, banks will be also prominent in terms of smart contracts, for example, for corporate banking, something maybe for a next panel, and yeah, for the next generation, definitely, yeah.
All right.
Thank you.
That's all our time. Thanks, everybody.